All right, let's dive in today. We're going to take a closer look at GAL India Limited, their second quarter financials for fiscal year 2025. And, you've given me their official company documents, fresh from November 5th, 2024. And let me tell you, there's a lot to go over here.
Yeah.
Not just, like the numbers themselves, but we've got a legal battle brewing over pipeline tariffs and some really interesting, choices with their mutual fund investments.
Yeah, it is interesting because when you look at GL's performance, like on the surface, it appears to be pretty strong. Both the standalone and consolidated numbers are showing growth.
Yeah, definitely. Their consolidated revenue from operations, so that's, all their business activities,
Yeah.
went from 65,898.46 crore in Q2 of fiscal year 2024 to 68,803.22 crore in the same quarter of 2025. And their consolidated profit after tax, so essentially, the money they made after paying all their expenses and taxes, increased from 3,816.89 crore to 4,135.9 crore. And standalone profit, looking at just Yale's core operations, was even higher, hitting 5,395.91 crore.
Wow, those figures definitely line up with the the positive trends that they've been showing in their investor presentation.
Yeah.
GAL's market capitalization, which is the total value of all their outstanding shares, more than doubled in fiscal year 2024, hitting a huge 157,967 crore. And their earnings per share, which is a major indicator of profitability, that jumped up to 240 in fiscal year 2024 compared to only 105 the year before.
It really seems like GIL is on a roll. But let's dig a little deeper into where all this growth is coming from. Their consolidated results show, a breakdown of revenue by segment. And I mean, as always, natural gas marketing is, their main thing, even though that growth was a bit slower this quarter. But what really caught my eye was the city gas segment. Their revenue jumped from 5,372.46 crore in Q2 of fiscal year 24 to 6,641.67 crore in Q2 of fiscal year 25. I mean, that's a pretty big increase.
Yeah, that's a great point. And when we look at their investor presentation, we see this lines up with, kind of a strategic shift within GL. They're depending more on imported gas sources, things like regasified liquefied natural gas or RLNG, and spot purchases for their natural gas marketing, plus a big chunk of their planned capital expenditure over the next 2 fiscal years. That's all going to be dedicated to growing their city gas distribution network.
Interesting. All this strong performance, though, is kind of overshadowed by some issues, some legal headwinds. Both auditor reports, actually, included what they call an emphasis of matter section. And I think it's worth looking at that pretty closely.
Right. Yeah, there are definitely a couple of legal things that we need to pay attention to. The first one has to do with an order from the CESTAT, which is the Customs, Excise, and Service Tax Appellate Tribunal. And that's resulted in GL potentially having to pay like 3,580 crore. This all has to do with how they classified naphtha. Yeah, that's a lot of money. And then there's, the ongoing dispute with the Petroleum and Natural Gas Regulatory Board, or PNGRB, about their tariff orders for their natural gas pipelines.
That's right. Yeah, it's really important to understand, though, that GL's fighting both of these cases. They think they have a really strong chance of a positive outcome in the CESTAT case, based on the legal opinions that they've gotten. And as for the PNGRB tariff orders, JL has said that they'll make any adjustments if they need to after, the legal stuff is finished.
Okay, now for the thing that really stood out to me in the standalone cash flow statement, GL invested a massive 4,564.99 crore in mutual funds during the first half of FY25. But here's the thing. They also sold off 3,955.21 crore worth of mutual funds during that same time period. What do you think about that? Yeah, it is a pretty strange move. We can't say for sure. But one possible explanation is that they're rebalancing their portfolio. Maybe they're, strategically adjusting how much they hold in different funds to take advantage of how the market's doing at the moment.
Yeah.
Or to reduce risk because global energy markets are so unpredictable.
So you think this could be because of the uncertainty that they talked about during the Q&A part of their investor presentation?
Yeah, actually putting money into and taking money out of mutual funds could be part of a bigger strategy to manage their finances in a more flexible way, in response to all the pressures from outside.
That makes sense. Let's move on to their capital expenditures. The investor presentation had some interesting details there. They've set aside a lot of money, especially for pipeline projects and city gas distribution, which makes you think they're, really focusing on their core business.
Yeah. Over the next 2 fiscal years, they've allocated 3,313 crore to pipeline projects and 2,034 crore to city gas distribution. These investments really show that JL is dedicated to expanding its natural gas infrastructure, even with, the global push towards renewables.
Right. They also put aside 112 crore for net zero renewables, which, even though it's a pretty small part of their total spending, does seem to say that they're at least aware of the shift to cleaner energy sources. Do you think this is just, for show? Or could it be like the first step towards a bigger change in their strategy?
That's a really important question. I mean, for now, it seems like they're mostly focused on strengthening their current natural gas business. But this allocation for net zero renewables could be a sign of what's to come. It'll be really interesting to see how this develops, in the coming quarters.
Yeah, definitely. So we're seeing a company that's doing well financially, but is facing some big challenges. There's the legal battle with Sestat, the thing with the PNGRB, and the need to change with, the changing world of energy. Where do you think this leaves JL?
Well, I think JL is at a crossroads right now. They've got to figure out how to balance all these different priorities. Can they keep growing their traditional business while also putting money into a more sustainable future? I mean, that's the big question, isn't it?
Yeah, for sure. And we can't forget about that weird stuff with their mutual fund investments. Does that mean they don't have confidence in their core business? Or is it just, a smart move to manage risk in uncertain times?
It's a good point. This seemingly, small detail could actually tell us a lot about JL's overall strategy and their view on the future of the energy sector. It's definitely something to keep an eye on.
Okay. We've covered a lot, but it's clear that JL's story isn't over yet. Their second quarter financials show a company that's dealing with a complex and changing world. In the next part of our deep dive, we'll go even deeper into what their decisions might mean and look at the challenges and opportunities that are ahead of them.
I'm looking forward to it. It's really interesting to see how JL is kind of in two worlds at the same time. On the one hand, they're putting a ton of money into traditional natural gas infrastructure.
Right.
Which, makes sense if you think about how much energy India needs right now. But then on the other hand, they're starting to get into renewables a little bit, maybe because they realize that in the long run, they'll need to switch to cleaner energy.
Yeah, it's almost like they're hedging their bets, not fully committing to renewables yet, but also not wanting to be left behind as the world moves in that direction.
Right, exactly. And you see that cautious approach in their capital expenditure plans, like most of their spending is going to pipelines and city gas distribution. But that small amount for net zero renewables could be like a testing ground for future investments.
Yeah, and let's not forget about the legal and regulatory stuff they're dealing with. That potential 3,580 crore liability from the Sestat order. I mean, that could really hurt their finances if things don't go their way.
Oh, definitely. That's a big chunk of change. And it could throw off some of their plans for growth. And then you've got the ongoing tariff dispute with PNGRB. That just adds another layer of uncertainty. These regulatory issues can be really expensive and take forever to resolve. And they can also make investors nervous.
It seems like JL has a lot on their plate right now, trying to grow their business, deal with legal battles, and adapt to a changing energy landscape, all while trying to keep their profits up.
It's a tough balancing act. And the stakes are high. The choices JL makes in the next few months and years are going to be really important for their long-term success.
So what are some of the things that could happen? Like, what would be the best case scenario for JL?
Well, in a perfect world, JL would win both the Sestat and PNGRB cases, or at least get decisions that are in their favor. That would free up resources and let them focus on their plans for growth.
Okay, and how about the whole energy transition thing? How do you see that playing out?
Well, the best thing would be if they could smoothly integrate renewables into their business. Maybe they acquire or partner with companies that specialize in solar, wind, or other clean energy tech. That way they could use what they already know about energy infrastructure, but also position themselves for a future with less carbon.
Sounds like a win-win. But what if things don't go so well? What are some of the risks they face?
Well, if they lose those legal battles, it could put a huge strain on their finances. And if they're slow to embrace the shift to cleaner energy, they might fall behind competitors who are going after renewables more aggressively.
So it's like JL is walking a tightrope. They need to make smart choices that'll let them take advantage of what's happening now, but also be ready for a future that's probably going to look very different.
Exactly. And the decisions they're making right now are going to have effects for a long time. It'll be really interesting to see how they manage all of this.
Let's go back to those weird moves with their mutual fund investments for a minute. I'm still trying to figure out why they did that.
Yeah, it is unusual to see that much buying and selling in such a short period. Like we said before, we can only guess. But it could be that they're trying to manage their money more nimbly. Maybe they're testing different investment strategies to protect themselves from market swings.
Do you think it's possible that it means they don't trust their core business anymore?
I wouldn't say that necessarily. It could just be that they're being more proactive about their investment portfolio, especially with how the economy is right now. They might be seeing better returns or less risk in other sectors or types of assets.
So maybe it's more about strategic diversification rather than a lack of faith in their traditional business.
Exactly. You got to look at all the possibilities before you jump to any conclusions.
You've brought up some really good points. It seems like GL is trying to balance tradition and innovation, short-term profits and long-term sustainability.
It's a complicated puzzle,
Mm.
and there's no easy answer. But that's what makes it so interesting to follow what they're doing. They're like a mini version of the whole energy sector, with all its challenges and opportunities.
And for our listeners who are trying to make sense of it all, what are some key things they should be looking for in the coming months?
I'd say keep an eye on what happens with those legal cases. Those outcomes could have a big impact on GAIL's financial health. Also watch their capital expenditure plans. Do they stick with natural gas infrastructure? Or do they start putting more money into renewables?
Okay, and what about all those moves with the mutual funds? Should we be paying attention to that too?
Oh, definitely. If they keep doing things like that, it might mean they're changing their investment strategy or how much risk they're willing to take. It's definitely something worth keeping track of.
We've covered a lot in this deep dive, but it feels like we've only just scratched the surface. GAIL's story is full of twists and turns, and it reminds us that even the most basic-looking financial reports can be full of surprises.
Right. And as we wrap up this part of our deep dive, I want to encourage our listeners to really think critically about what we've talked about. Don't just accept the numbers as they are. Ask questions, look for patterns, and try to understand why GAIL is making the choices they're making.
That's great advice, and it highlights something we've been saying this whole time. Don't just take the numbers at face value. Dig deeper, ask questions, and try to understand the story behind the headlines.
Exactly. That's what a real deep dive is all about.
We'll be back in the next part of our deep dive to look at some more insights and share some final thoughts on GAIL's future prospects.
It's pretty amazing when you think about it.
Ah.
GAIL is in this really unique spot, you know?
Yeah.
They're a big deal in an economy that's growing really fast, and they've got this history of success in natural gas, but things are changing all around them. Like the whole energy scene is shifting right under their feet.
It really is a fascinating case study. It makes you wonder how these big established companies deal with these kinds of changes, you know? Do they just keep doing what they've always done? Or do they try to completely change themselves? And what are the risks and rewards of either way?
Yeah, it's like they're trying to build a bridge to the future, but they're still standing on the foundation of their past. That's a great way to put it. And that bridge they're building, it's got to be strong, like strong enough to get them through some rough times. We've talked about all the legal stuff, the regulatory uncertainty, and the global push for cleaner energy. All of that could really impact what happens to GL.
Makes you think, what would a truly successful transition look like for them? If we could look ahead 5 or 10 years, what would show us that they made it through this period in a good way?
Well, for me, one of the main things would be if they had a diverse energy portfolio, I'd want to see them branching out from natural gas and really investing in renewables, whether that's through buying other companies, partnering up, or just growing their own renewable energy operations.
So not just dipping their toes in the water, but like jumping in head first.
Exactly.
Yeah.
And I want to see that they're not just following the latest fads. They need a real plan, a strategic approach to this whole energy transition thing.
Right.
They need to figure out how to use where they already have their infrastructure, their expertise, to become a leader in clean energy.
Okay, and how about their finances? What would success look like from that angle?
Well, of course, making money is always important. But I'd also look for signs that they're financially stable. Can they handle those ups and downs in the market? Can they absorb the potential cost of those legal battles? And are they making investments that will pay off in the long run?
So you're saying that real success for GAIL isn't just about holding on to what they have, but about changing and adapting to become even stronger and more resilient.
Exactly. They need to be thinking about how they can not just survive this energy transition, but thrive in it.
As we wrap up this deep dive, I'm curious to hear your final thoughts. What are your main takeaways from GAIL's second quarter financials, and what advice would you give to our listeners who are trying to understand all of this?
Well, my main takeaway is that GAIL is at a turning point. They've got a lot going for them, but they're also facing some major challenges. The choices they make in the next few years are going to be really important for their long-term success. As for your listeners, I'd say watch what GAIL does, not just what they say. How are they spending their money? What kind of partnerships are they making? And how are they reacting to the changing rules and regulations in the energy world? The answers to those questions will tell you a lot about how committed they are to a sustainable future.
That's great advice. And it brings us back to something we've talked about throughout this whole deep dive. Don't just take the numbers at face value. Dig a little deeper, ask questions, try to understand the story behind the headlines.
Exactly. That's what it's all about.
Well, that brings us to the end of our deep dive into GAL's second quarter financials. We've uncovered some interesting stuff, raised some tough questions, and hopefully given you a way to understand the challenges and opportunities ahead for this big Indian energy company. We encourage you to keep learning and exploring on your own. And we'll be back soon with another deep dive into something new that'll hopefully get you thinking